Hello, Oak Bloke here, and this video is, basically I just sort of rationalize my decision to exit Tek Capital. So I wrote this article yesterday, teched off, and yeah, I mean it was a decision I made to having included in my ideas, which is this. This was the Oak Bloke 2020 ideas for 2024. So tech was this one here at 6.25p. So this was written back in December 2023. So yeah, I mean, it doubled its money in 2024. It dropped back, so it's been on a little bit of a roller coaster. So if we went and looked at its performance, it's at 6.6 slash 7p to today, um, and yeah, we can sort of see over the course of the so I think this was where is end of December is sort of here. There we go. So it's, it went up for a while, went down, went up, went down. So bit of a roller coaster, I guess you could say. So I mean, obviously, I've given my reasons in here. The Bell is now suspended. They're now selling intellectual property, so that one is off the table. I had a look at Lucid's accounts. So the latest accounts are as of the end of March. Now, bearing in mind that Nautica's been in the range for a while. I'd like to say 9 months. Um, Eddie Bauer's been in the range for what, 6 months at least. Reebok's in the range in this quarter. And quarter on quarter, I mean, this number alone just made me look at it and put my head in my hands and say, do you know what? Enough's enough. 25% sales growth over 12 months. I mean, yes, they have obviously improved their gross profit margin, which is good to see. They're actually making a gross profit of 220, which is obviously massively up from $6,591 for 3 months' work. But then you've got all of the operating expenses. So operating expenses are pretty much what they were before. Sales and marketing expenses have gone up. The research and development's pretty much where it was 12 months ago. And related party, I mean, that's the fee that they pay to Tek Capital, I believe. So, I mean, they lost what, nearly $1.72 in that quarter. A year ago, they were losing $2.60. It- You like, how many quarters do you give them to wait for that turnaround? And I was very hopeful. I mean, I love my Lucid glasses. I've got several pairs. Well, I've got one. My wife's got one. Yeah, and I really like them. I think they're great. In fact, where are they? Here they are. I take them out with me. There they are there. Take them out with me, put them on, listen to my podcasts. Absolutely love them. I won't put them on and wear them because that'll look a bit naff. But yeah, absolutely, like, beautiful packaging, just really like it. But but like, we're investors, we're not philanthropists, and yeah, I just said, you know what, I can't. They've not achieved what I was hoping and expecting they would achieve. And then we moved to Guident. Now I know, uh, in the chatosphere, there's been quite a lot of pushback against, oh well, we're just waiting for the Guident IPO. And look, hopefully that does work out for you. That does work out. But I would kind of put it to you, just go and, the thing the thing that kind of has changed, in my mind at least, about Guident, and I wrote an article about Guident and how humans in the loop, is a necessity, absolute necessity. But what if these companies are just doing their own thing and not going to Guident? They're just building their own um, monitoring centres, and really the market will only be for, I suppose, autonomous vehicles that are running very bespoke autonomous vehicle software. I mean, realistically, is it going to be a plethora of players? Are a plethora of autonomous vehicle software providers going to be allowed to operate? I just don't see it. I think it's going to get all centralized, probably realistically around the Mag 7, with possibly a couple of outside players. I mean, there's one that's backed by IP Group in Britain that's based in Oxfordshire, and they are sort of doing some work, but fundamentally, probably Tesla, Amazon, Microsoft, Google, Alphabet. You know, Alphabet have got Waymo. Tesla have obviously got their robo taxi. These, you know, the robo taxi is launched. It's operational, and they've not picked up the phone to Guident. Waymo is operational, has been for years, several years. You know, 10% of taxi rides in, I think it's Austin, are being done by autonomous vehicle. They have not picked up the phone to Guident. So I just worry that it's an interesting technology, but not one that actually solves a problem for anybody. And those sales that they have made, and I've kind of, you know, in order to kind of pull the plug on this, I did sort of think about this. It wasn't just a spur of the moment decision, but I would just sort of put it to you, like, if you go and look at the 2024 accounts, which I think are, where have I put them? They are here, here. Yeah, they're here. So, I mean, there's no sales data. So you don't know what they're selling. Um, if we go and look at, I mean, they say here several new contracts in 2025 and a strong sales pipe. I mean, obviously that's encouraging words, but what does that translate into? We also know that the fair value was held at $18 million, but that fair value is based upon the value of the patents and the value of the predicted sales that are discounted at 24%. Now, if those sales are anything other than very near term, and if those sales are not very, very substantial, you know, that 18 million valuation is reliant upon some very, very, very aggressive numbers. So if that's the case, well, what are the numbers? What, you know, how far away or near to you are you to achieving those aggressive numbers? And like, we're able to measure Belluscura because they went public. We were able to measure um, Gen IP because they went public. We were able to measure Lucid because they went public. And Microsalt because they went public. And in every one of the other examples, when the curtain is dropped and you can see the actual sales. I mean, you know, this is the sales for, so it's the Microsalt accounts. You know, the sales were 750,000. The cost of sale was 1.2 million. So they lost $440,000 in 2024. So they didn't even make a profit on the salt that they sold. Now, you know, fair enough. You know, maybe there were reasons for that and mitigations. But what terrifies me, personally terrifies me, is that in this update here, I'm reading about how the number of sales has increased 142%, but nowhere in any of that do they say, and by the way, we've improved our margin, or that we're now sort of gross profit positive. All we know is that the sales have grown. Now, if you're selling more but losing more money because you're selling it at less than what it's costing you to make, again, it's like I'm really struggling with that concept that why is there no mention of this? Like, that, that I'm not even making money at gross, I'm not even making a gross profit. I'm making a gross loss. Um, that that's kind of like, I've been hauled below the waterline. Well, what are you doing about patching up your boat? Oh, don't worry about that. We've increased our speed. Well, okay, but you've got a hole in your boat. So it just I just don't get it. I've just kind of gone through them all and said, "Do you know what? Like, being brutal about it as much as I like that." Again, I've got a bottle of, or not a bottle, uh, um, uh, a, um, a packet. It's not a packet either. A tube of Microsalt. I use Microsalt. I like the Microsalt. I think it's a great idea. It's nothing to do with crushed up salt. It's nothing to do with low sodium salt. I saw various people saying, "Oh, it's a load of rubbish because it's crushed up salt and anybody can do that." Well, no, it's a patented design, but you've got to be able to sell it profitably, and they they there's at this point in time, they haven't been able to do that. And then also there was the latest news and this stuff about the the update on the unfair transactions. I mean, that worried me as well. So yeah, just kind of felt a little bit worried. Coming back to Guident, let's come on to Gen IP in a second. Coming on to Guident, I mean, these guys are the guys that make these robots that they say that they're making strong sales over. If you go and look at there's the Startian accounts. This is a Spanish Madrid-based SME. um, I've not been able to find any evidence other than they raised 1.8 million euros of cash back in 2018 to 2020. They sold 9 units in 2023. They sold 10 units in 2024, and there's no news since. So, like, what do those little robots sell for? I mean, let's say that they're sort of hired rather than sold. That it's a service provision. I mean, let's be generous and say, well, if you had a security guard walking around 12 hours a night, that person would be on, let's say, 30 grand a year. So let's say the robot can do it for, I mean, let's be generous, half the price. $15,000 a year. To kind of operate, let's say, the operating costs of that service, because obviously you've got to have a human operator that's standing by if these little robot devices, little monitoring devices spot anything. So, I mean, you are still paying for a human being, and let's say that human being's costing you 70 grand a year. All the other costs, let's say 40 grand a year. Let's say you've got, I don't know, 10 of those robots in this, in this announcement. They talk about it being for a waste company. Let's say it's 10 robots, 150,000 a year. So maybe you're making 70,000 gross profit. I mean, it's not, compared to what the administrative costs of the business, the operating costs are going to be, that's a small drop in the ocean. That's not strong sales as far as I can see. And I just cannot see more evidence than that. And then you've got Gen IP. So these guys sold 123,000 again for the period ending December 2024. Cost of sale was 107. So you're talking about a 16,000 gross, or 15,000 gross profit. Now, if you're making 15,000 on 123, I mean, that's a very small gross profit margin. That cost there, I worked it out. You'd have to be selling 7 million, okay, at that level of gross profit margin to just even break even on that cost there, let alone any other costs, let alone any sales and marketing, let alone anything else that's going on in this business. So, that again, these guys in their update, I think it's in here and the regulatory news. I mean, they do say, look, we've grown, trading statement, 20 5th of July. Yeah, so I think it was 500,000 of sales in 1H25. So 1H25, that cash was 1 million. Okay, whereas there it was 972. But I mean that could be that they've just got bigger creditors. You know, like is that actual working capital or is that cash balance? Do you see what I mean? That might not actually mean anything. So 488,000 of new orders. Okay, which is good. I mean, that's in 6 months, but that is 1/7 of what it's going to take to break even. So again, it's the same problem. And if you've got that much cash and your overheads are costing you the better part of 1 million, well, you've got 12 months to grow it to 7 million, and then you've got to either raise more funds, go into debt, or cut costs somehow. It just again, if I go back to my article, and I'm not saying that like this bar was impossible or this bar was a bridge too far, but I sort of said to myself, well, there's 35 million ideas each year. If they get like even like 1 in 10,000 of those 35 million ideas turns into a report, which to my mind seemed like, well, that seems quite easy. 1 in 10,000. They got their fingers into the pies of hundreds and hundreds of these universities. Each one of these universities is coming up with thousands of ideas a year. I mean, can they get 3,500 reports? That would be 2.6 million. And the margin, clearly here I was sort of over optimistic about what sort of margin they could achieve. I mean, but I was doing that based upon the idea that it was all going to be, well, not all, but it was predominantly going to be done by AI, that this was an automated service that didn't require human beings. Now, obviously, when you're getting a gross margin of 15%, well, there is quite a lot of human intervention to make that successful. It doesn't just rely on AI. There's an element of AI, but it requires a lot of human time as well. Either that or you're selling the reports too low, one or the other. I don't know which. But and of course we don't know how many reports. I don't think we know how many reports were sold. All we know is that the revenue was what they say. That it was a 480 odd of sales. So yeah, I guess for all of these, I just struggled with all of them, and also I sort of said about putting your money to work. I mean, like look at like the robotics ETF. That's one of my ideas for this year. I mean, just I don't want to but like Nvidia, and I'm not saying go out and buy Nvidia particularly, but just kind of as an example, they're growing their revenues. I mean, back here it was 14.5 billion. In the last, or certainly in this article, it had grown to 35.6 billion. Gaming, well, it shrunk slightly, but it was sort of at around 2.5 to 3 billion. Visualization had grown by about 25%. Autos had more than doubled. So, like when there's other companies that you can invest in that are genuinely doubling their sales, they're actually getting traction to their ideas. I just struggle with this sort of, well, A, lack of visibility of how well they're progressing. B, when you do get visibility, there's scary numbers that and obviously you can spend a period of time hoping they improve or anticipating they'll improve. But I think there just does come a point where you say, do you know what? I'm going to set a target, just as you would if you know, like if you were actually running that business, you would say, these are your targets. This is what I want you to achieve. And if those people didn't achieve those targets, like if you had a salesperson working for you, they didn't achieve their sales target. Well, there comes a point where you say, sorry, salesperson, I'm going to have to let you go. Here's your marching orders, and get another salesperson. That will be more successful, and that's the nature of of the world. So yeah, I think without that growth trajectory and actual revenue and actual cash, that's what I meant by sort of investing into cash generative, and around the robotics. I mean, there's plenty going on, plenty of growth around robotics, with all of these companies. I mean, you can sort of see, growth, continual growth in all sectors, and the fact that there doesn't appear to be that same traction and growth. I think you've got to kind of just take a hard look at that and just consider whether, and I'm not saying it particularly about tech or about any of its holdings. I'm just saying in general, when you've given a share idea a fighting chance, and you've it's failed to deliver on its targets, as you would with an employee that's failing at their job. You've just got to kind of take a view, and that's what I've done, and that's the reason for exiting tech. So I hope that's useful and gives you some insights and gives you some uh, ideas on kind of why I've chosen as I've chosen. I think I would also just point out that I mean, yes, whilst the market capitalization of these companies is, obviously it looks great, it's obviously cash that makes the wheels turn. And when you look at sort of the when you look at the so if we look at the annual report, for example, and we look at the so page 47, okay, the statement of financial position, um, we're talking, what, cash of less than 1 million, obviously receivables. So those receivables may or may not be liquid. Um, the, it, it, and obviously, yes, they can do further fundraisers and have done, which of course then is at a discount. But the problem with the IPO is that if they don't IPO with enough cash, and I mean, it's not just Guident that's had this problem. I mean, Gen IP was floated and it's got quite limited amounts of cash. Obviously, Belluscura ran out of cash. Um, Microsalt doesn't have vast amounts of cash, and the argument that they would make is, well, we don't consume large amounts of cash either. But at the same time, well, okay, but if you can't produce a product at a positive gross profit, then that's a problem, and you need cash to expand or contract, more profitably with your suppliers and get to a scale more profitably. So that's it's ultimately a problem of cash as far as I can see. And um, I think that's kind of just, a lot of things that have come together to make me just decide enough. It's as I say in the article, it's that I've decided to take my leave, and that's sort of my reasons why. Anyway, hopefully that's useful. It's just me giving my personal view on the world and these holdings. It's not investment advice. You make your own investment decisions. That's all from the Oak Bloke. Cheerio for now. Cheerio.